Have you ever wondered why so many investors, from beginners to seasoned professionals, are drawn to the Standard & Poor's 500 index, also known as the S&P 500? What makes this collection of 500 of the largest companies listed on stock exchanges in the United States such an attractive choice for long-term investments? The S&P 500 was introduced by Standard & Poor's, a division of McGraw-Hill, back in March of 1957. It quickly became a barometer for the US economy and a benchmark for many investment portfolios. With a diverse range of companies under its umbrella, the S&P 500 offers a broad snapshot of the market, making it a preferred choice for many investors. Why do people invest long-term in the S&P 500, you may ask? Well, the answer lies in its historical performance and the power of compound interest. Over the last several decades, the S&P 500 has delivered an average annual return of around 10%. This means that money invested in the S&P 500 has a good chance of doubling roughly every 7 years, thanks to the magic of compounding. Imagine if you had invested $10,000 in the S&P 500 20 years ago. If you had left your money untouched, it would have grown to nearly $70,000 today, even with the ups and downs of the market. But it's not just about the potential for high returns. Another reason to invest long-term in the S&P 500 is the lower risk associated with it. Since the S&P 500 is made up of 500 different companies, it provides a level of diversification that can help smooth out the bumps in the road. However, investing in the S&P 500 isn't a one-size-fits-all solution. It requires a good understanding of your financial goals, risk tolerance, and investment horizon. And while it's tempting to try and time the market, history has shown that a buy-and-hold strategy often yields the best results. As the saying goes, the stock market is a device for transferring money from the impatient to the patient. So remember to be patient, stay invested, and let the market do its work. As we wrap up, remember this sage advice from Warren Buffett, one of the most successful investors of all time. Do not save what is left after spending, but spend what is left after saving. So, start saving, start investing, and let your money work for you. Thank you for your time. And remember, the journey to financial freedom starts with a single step. Until next time, keep investing and keep growing.